Welcome to the Creating Wealth Show with Jason Hartman. You're about to learn a new slant on investing, some exciting techniques, and fresh new approaches to the world's most historically proven asset class that will enable you to create more wealth and freedom than you ever thought possible. Jason is a genuine self-made multimillionaire who's actually been there and done it. He's a successful investor, lender, developer, and entrepreneur who's owned properties in 11 states, had hundreds of tenants, and been involved in thousands of real estate transactions. This program will help you follow in Jason's footsteps on the road to your financial independence day. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Welcome to episode 1484, and thank you for joining me on this special weekend edition. Again, we normally publish 5 days a week, but when there's just too much news, we will add 2 extra days and talk to you over the weekend. So we've got our Meet the Masters virtual summit coming up, and we're getting just super excited about that. I talked to one of our listeners yesterday, that is Sean Carroll. You've heard him on the show. He's done some client case studies, and we might be having him involved. He's a professional actor and business person, which you usually don't see those two go together. So we may have him joining us as well. And of course, George Gammon, and we are working on a whole bunch of other speakers. And I think it's going to be just a super duper event. Again, there's so much you can do when it's not a physical event that you can't do. Well, did I say that right? It's early. It's early Sunday morning here. But whatever, you get the idea. There's so much you can do with a virtual event that you cannot do with a physical event. So very excited about this upcoming event. And again, we should have the registration link for you next week. But we do have our webinar, and a whole bunch of you are attending our Southwest Florida webinar, and you're saying great things about that webinar and those properties. So check that out, jasonhartman.com/webinar. That is singular, by the way, jasonhartman.com/webinar, and check that out. We've got a listener question from Nick. And Nick, thank you for this question. He says, you should do a debate with Ramit Sethi. You're both great, and I love listening to both of you, but you are polar opposites when it comes to investing. It would be an awesome episode to have him on the Creating Wealth Show and talk about the differences between your investment types. And then we got some comments on this post in our private group. One of our listeners, Christina, said, I prefer Jason any day over Ramit. Ramit is arrogant, and his target market is younger. He helps people get jobs, get raises, and make their first $1,000 in a business. We are so far beyond that. Audience is completely different. Well, I agree with Christina's comment about being completely different. And I have to tell you, I did interview Ramit several years ago. And I didn't really debate him in the interview, but the next day he reached out and said, please don't run the interview. And I said, why not? And he said, well, I just didn't feel good about it. And that was about it. And then I said, well, okay, when can we reschedule? And he says, I'll get back to you. I reached out a couple more times after that. He never rescheduled. So I don't know, should we be playing chicken sounds right now? Like he was just chicken. I don't know. Is that it? Yeah, I think his strategy is, he's got his market. Susie Orman has her market. Dave Ramsey has his market. Folks, look at these people are all, we'll call bubblegum investment advice, pop culture investment advice, low-level investment advice. I'm not faulting them, by the way. They have their market. They have their audience they serve. And, we had Dave Ramsey's number 2 guy on the show a few years ago. And, honestly, he just didn't know what he was talking about. And Dave Ramsey doesn't know what he's talking about for investing. But he's great for the market he serves. For his audience who has got mountains of credit card debt, who spends money on stupid consumer goods instead of saving money to get their life together, and they're paying high interest rates and they're not investing. Dave Ramsey is great for that. Ramit, I haven't studied his material that much, so I can't say, but, I thought his interview was weak and it was just boring, honestly. Didn't seem to have any deep understanding of economic issues or anything like that. Anyway, listen, I don't have anything against him. He's welcome to come back on the show. Get him to respond to our invitations and we'll have him back. We can do a debate or just an interview, whatever you want. But I'm sure for his market, he's fine. All of those people I mentioned are way bigger than me. They've got bigger audiences. They're more famous. I don't know if they're richer. Well, Dave Ramsey's richer. That I know. Dave Ramsey is richer than me. The other two, I'm not sure. Not sure. But we'll see. So that's the scoop. There's a difference between pop culture and what I'll call bubblegum financial advice and the deep level of analysis that we do on this show. And the people that listen to that bubblegum pop culture advice don't usually listen to this show because this show, honestly, it's just a higher level. And that's just the way it is. There's a market for everything. Sometimes I like bubblegum pop music, but sometimes I like deeper music, whether it be Pachelbel's canon or Mozart or, honestly, Avicii. Avicii's music is pretty incredible, the late Avicii. My favorite type of music is the 1970s singer-songwriter music. So whatever. We all have different moods, different markets. We all cross those markets a little bit too. Okay, that's that. But thank you for the question, Nick. I don't think Ramit is going to have the guts to come back on the show, but he's certainly welcome to anytime. We did that other interview with him and he asked me not to run it, so I never ran it. And listen, I don't have to honor his request. If I interview someone, I can run it. But I just did because honestly, I thought his interview was boring. I didn't think it contained any good advice. And I didn't, listen, my job is to be your agent. You, the listeners, my job is to protect your time and make it valuable for you. And that's what I try to do. So sometimes I interview people and I don't run their episodes because they're just lame. And we don't want to run lame stuff on here. We get to decide what we use and what we don't use. So my job is to be your filter. I want to remind you, I was engaging in a forum conversation yesterday with a real estate investor, and he was talking about these bigger societal issues and stuff. And I was just focusing on the investment quality and how to optimize investments. And it reminded me of the thing I have talked to you about so many times in the past over the last 16 years here on the show. And that is this brilliant, brilliant piece of advice. And this brilliant, brilliant piece of advice applies very much to many of the horrible things that are going on in the world today. And it applies to the last several decades that, frankly, America has done a good job trying to destroy itself the last several decades. And that is a sad state of affairs. And if they had simply followed this great advice, the country would be much better off. Everybody in their personal lives would be much better off. This applies to the nation, the company, the individual. It applies to how one runs their family, how they interact in their personal relationships, how they invest, how the economy works, how fiscal policy works, how monetary policy works. And it even applies to our own self and our self-concept. And it applies to addictions and addictive behaviors and all sorts of things. So here is one of the greatest piece of advice. I wish I could claim this as mine. It's not my idea. I did learn about it, though, back in the 80s when I read a tiny little book, a fantastic old book that is out of print now, but man, it's brilliant. And that book is The Greatest Management Principle in the World. And the title is deceiving. And it's by Michael LeBoeuf or LeBoeuf. I don't know how you say that, but I think it's LeBoeuf. And this brilliant book, it is about management, but it's about so much more than management. And you probably know what I'm going to say, this brilliant nugget. It's so brilliant. And I want you to think about it in everything. I have many things that I talk about that just apply to everything in life. Compared to what? right? The Jason Hartman question, compared to what, right? It's an amazing time to be alive. That is true, even with all the crap that's going on in the world and the country. No question about it. And then the concept of the profound impact of things unseen, or the profound impact of things that didn't happen. How about considering what never happened, but what could have happened when we analyze things? And those are concepts that just can be applied everywhere and anywhere in life. We talk about them in economics and investing mostly, but they can be applied anywhere. Oh, hey, by the way, before I go too long on my tangents, we have the second half of hedge fund manager Hugh Hendry today on our weekend edition. So we're going to do part 2 of that today. And then tomorrow, back on our weekday schedule, we've got a bunch of great stuff coming at you. And not the least of which is our client, Ross Warden, who I did an interview with. And I'm not sure we'll run that one this week or next week, but I got to tell you, he shared with all of you, and thank you, Ross, for doing this, a fantastic little spreadsheet that he uses to show how he is going from 0 to 93 properties in 10 years. A very realistic, well-considered plan. And we are going to make this available as a calculator. He shared the basic spreadsheet, and we are already enhancing it. Doug has been working on that for us, and Doug is like the master of spreadsheets. You know, you give that guy a spreadsheet, and what would take me a day to figure out, he can do in like 7 minutes. So, yeah, I just worked up this little genius spreadsheet for you. Okay, Doug, thanks. 7 whole minutes of your time. But people speak different languages. Some speak English, some speak spreadsheet, right? So anyway, Doug is enhancing that spreadsheet, and we're going to make it available to all of you, and you're going to love this. So that's coming up on a future episode here, not too far away. But the greatest management principle in the world, and does it apply to police brutality? Does it apply to idiot looters and rioters? And they are idiots, by the way. Listen, I'm in favor of a protest. People have the right to redress the government, of course. But these people are morons, losers, idiots, destroyers. There's 2 basic kinds of people in the world: those who add value and those who destroy value. These are the destroyers of value, okay? And listen, all you have to do is watch any of the videos, just turn on TV or go on the internet and watch the videos and look at, you know who the destroyers are, right? They're the lefties, they're the over-entitled people, they're these idiotic, university brainwashed white kids who think they have a cause and they don't. And by the way, all of this is coming from someone who actually supported, at least in principle, the Occupy Wall Street movement several years ago. Remember that? Yeah, I was actually in support of that because Wall Street is a scam. It's the modern version of organized crime. So I'm not being too dogmatic here, right? I'm not being an ideologue. I'm looking at the specifics of the situation. These morons who are destroying all these places, you know, it's the greatest management principle in the world. And we've created the problem. The responsible people in society have created this problem because we did not follow the greatest management principle in the world. What gets rewarded gets repeated. What gets rewarded gets repeated. And look at all the places in life where that applies. Does it apply with your spouse, your kids, yourself? Does it apply with yourself? Do you reward yourself for things that aren't necessarily good for you? Yeah, we all do that sometimes, right? Overeating, smoking, any form of any kind of addiction whatsoever. What gets rewarded gets repeated. Just think of it internally, externally, interpersonally, you know, in a company, in a nation, in a world. And we've created this disastrous welfare state. The left has decided, let's just import people from foreign countries illegally and let's let them overrun the country and get a bunch of free welfare. Let's attract them here. And so we're just going to make the economy, turn it into this anemic disaster. And it's a mess. And they just want to do that so they can increase their voters, right? The government has a big incentive to make people dependent on it. And Hugo Chavez in Venezuela, this is exactly what he did. And this is why, for a time, he was so well liked. He just doled out the goodies. There's this song, I think it's by Styx from years ago. It's called Too Much Time on My Hands. And the guy's unemployed, and that's what the song's about. And he's in a bar buying everybody drinks or something like that is part of the lyrics. And, you can have all the friends you want if you just give them free stuff. So this is the game plan of every politician. And this is why we will be enriched as real estate investors, because politicians always have the incentive to dole out the goodies and to spend, spend, spend. So look, none of us like this, or at least none of us smart people like this philosophically, but we can align our interest with it and benefit from it. Okay, we can benefit from it. And that's what we've got to do, because the likelihood of changing it is very, very low. Before we get to Hugh, one more thing. So remember, what gets rewarded gets repeated. And if you want to get the right things rewarded, go to jasonhartman.com and check out our properties. Join our webinar, jasonhartman.com/webinar. Check out some properties in more detail on the webinar. And this one's a real short one, just about 30 minutes long. So I think you'll enjoy that. Okay, this article is from CNBC. I want to just share this before we go. Maybe we'll take a deeper dive into it later. But just quickly, millennials are fleeing big cities for the suburbs. Now, the interesting thing about this is this was actually an old article. It was published back in September of 2019. This was pre-COVID. I did not see this article until just now, but breaking news, millennials are getting older. And as they enter the next stage of life, marriage, kids, higher salaries, Gen Y is beginning its exodus from busy cities, just like generations that came before. Data released from the U.S. Census Bureau earlier this week show that some 27,000 millennials between age 25 and 39 left big cities like New York, San Francisco, Houston in 2018 for greener and less expensive pastures. I would argue that Houston is nothing like New York or San Francisco. Houston is the suburbs. What are they talking about? I guess, just downtown Houston, sure, but greater Houston, which is a very large metro, and hundreds of our investors have purchased properties there. I certainly have done very well with them. I would consider that the suburbs, but hey, listen, this is the mainstream media, right? You're never going to get a granular take on things. Okay, so anyway, in 2018, they left these places for greener, less expensive pastures. And New York and San Francisco, certainly that's accurate, but putting that in the same category as Houston is crazy. Chicago, Las Vegas, Washington, D.C., and Portland, Oregon are also seeing large numbers of residents leave. Now, interestingly, some of these have the big government, high cost of living, big taxes problem. Las Vegas, that's kind of an odd bird. That's sort of a different category. Anyway, whatever. That marks the fourth year in a row that there has been a noticeable decline in millennial populations in major cities. And where are they moving? To combat ever-increasing housing costs and lack of access to family-friendly amenities, they're moving to nearby suburbs, mostly, as Axios reports. So this is pretty interesting. So that trend, I guess it was already happening to some small degree, but now, like everything else, COVID has accelerated everything. Everything has accelerated with COVID, well, except business. The restaurant business has certainly not accelerated. The spa business has not accelerated. Those have been decimated, sadly. So many other things have really accelerated. And by the way, on the good side, these efficiencies, and we're going to be presenting some of this at our upcoming Meet the Masters virtual conference. These new technologies for self-managing properties, for showing properties, the virtual leasing office. Wow, there's some great things coming your way, investors. You're going to love this stuff. I've really been trying to look at the cutting edge of these technologies, which, by the way, are not like some new technologies. It's just that now they're making them better, they're refining them, they're making them easier to use, and the adoption rate is through the roof. What does this mean to you? More efficiencies for your real estate portfolio, and that means greater return on investment for you, more money for you, more financial security for you. So Lots of good stuff like that coming up at our Meet the Masters conference and also on future episodes, of course. All right, without further ado, let's get to part 2 of Hugh Hendry. Give us some predictions. Gold, Bitcoin, the dollar, asset prices, consumer prices.
Okay, so predictions are for the birds, okay? Until they invent a time machine. I mean, yeah, and, we'll have to get Elon Musk on. Once he has conquered Mars, we must reroute his intelligence to designing a time machine. They don't exist currently. So I have not been to the future. And predictions, I just tire people. Predictions are for morons, and I'm an oxymoron, as I stated earlier. But what can I say? I feel as though I'm guessing the majority of your listeners are based in America or kind of have an affinity to calling themselves American.
Majority. I mean, we have listeners in 189 countries. So okay. I'm waiting, Hugh, I'm waiting to get North Korea and Cuba online, but oh well.
Well, they're probably using a proxy server with their VPN and they're probably listening right now.
Yeah.
So I want to say that I feel as though actually America has been taken hostage, and that if you're a US citizen, you are a serf, you're almost like a slave to external forces. The external forces being other economies. I want to say China has kind of won, that China has pimped America. And secondly, financial speculators have pimped America.
Yeah, which is to say that financial speculators for sure, no question about that. China, I don't know. So you're bullish on China then, huh?
Didn't say that.
Okay.
Didn't say that. I said that the US, by its own admission, it had an ambition to have the dollar serve as the reserve currency, answerable to no one. Mm-hmm. The currency of commerce is the US dollar. And through a whole series of crises in Southeast Asia in the late 1990s, they really reinforced the point. If you're going to run the Thai economy or the Malaysian economy, or indeed the Chinese economy, it's run effectively on US dollars.
That's amazing. I know.
And for them to grow, prosperity creates a desire for more and more dollars. Mm-hmm. And it's the Federal Reserve that has to produce those dollars.
Right.
And when there's a crisis that emanates, a crisis that begins like a hurricane that begins offshore to the United States, it's the US that has to react. It's the US that has to print those $60 trillion of annualized dollar bill issuance in 1 week in March because of a crisis that began in Wuhan and not in Detroit, if you will, okay? So partly you get what you want. And so the US policymakers have allowed, at each step along the road, the twisted road of history, decisions have got tougher and tougher and tougher. Now, back in the late 1920s, policymakers were zealots, okay? And so you've got a choice. Okay, your choice is this. You can have policymakers like we had in 1930 at the US Federal Reserve, and kind of like Paul Volcker at the Federal Reserve in the late 1970s. And they have an ideology which is hard money. Yeah. The dollar has to be strong and it has to protect the purchasing power of the US citizenship.
Right.
At all costs. And if we use the language kind of which was there around the US elections in the 1890s, effectively those policymakers were willing to sacrifice the US household and to crucify it on a cross of gold on the ideology of hard money.
Yeah, okay. I agree. That goes too far. It's impractical nowadays.
And at its peak, you had Andrew Mellon, the Treasury Secretary for the US in 1930, and his famous thing, let's raise interest rates and purge the system of its rottenness. Let's clean the stables.
Yep.
And what happened? You had 20% unemployment.
Yep.
You had a generation deeply psychologically scarred by the human tragedy. Okay.
Multiple generations, actually. But
yeah, indeed. So, or you can have today. And really today it kind of began in a cloud with Greenspan. Like you said, he was a smoke and mirrors guy. He didn't reveal himself. There was a lack of democratic check on him because he refused to reveal what he was doing. Bernanke really is the architect and really the person who marks the beginning of the polar opposite. And there's nothing in between. Mm-hmm. And the polar opposite is Bernanke, I want to say, at the bottom of the bear market after the TMT crash. But Bernanke put his hands up and he said, I am here on behalf of the Federal Reserve to apologize to the US household. I'm here to apologize to your grandparents, to your families that were made to suffer for generations because my predecessors pursued a hard money doctrine at the expense of everything.
Yeah, and he was a big student of the Depression too. That was his thing.
Absolutely. And he said it happened owing to an ideology. It wasn't necessary. So here we are now, and we're in another world. And you can defer and defer and defer the notion of a Great Depression and that human tragedy. And that's what the Federal Reserve are doing. And they're getting a bad rap for it.
Yeah. And they're getting a bad rap is that sort of from the Peter Schiff type camp of the hard money, the Ron Paul Peter Schiff type of camp?
Well, it is, and a huge contingent of the financial base. Those owning Bitcoin and gold shares are very much all there. I'm not like passing judgment. Mm-hmm. I'm simply saying that this is ideology, and it's like this kind of strategic game. And what people forget is that it's not checkers on a board; it's real people.
Yeah.
Okay. And the proponents or the fiercest critics of the Federal Reserve can't really offer a solution. They can't offer an alternative. Or if I'm to put words in their mouth, because they don't really offer the alternative, but if you're to purge the system of the rottenness, that means enormous bankruptcy. And again, it means a redux of the 1930s. That's what it means.
Right. And the thing about it is all of those sort of the hard money crowd, they've been saying that stuff since, probably forever, but Howard Ruff, if you know that name from back in the 70s, I remember, and through the 80s, 90s, 2000s, and he was on my show, and they're just always wrong. These guys are just always wrong. They make like really interesting arguments. I love listening to them, but it just seems like we are actually in a new world. And when you have the reserve currency, when you have the biggest military, you can kind of defy the laws of math and physics, at least for a long time.
I am not here to cast judgment on who is right and who is wrong. And I think actually that when people form opinions, and then people are entitled to their opinions. I'm not expressing an opinion in terms of the veracity or smartness of anyone else's argument. I have my own problems. But what I want to say is that we make geniuses of people mostly owing to circumstance and the time in the cycle. And these cycles they run as long as an adult life, which is to say 40 or 50 years. We spend 20, 25 years being kids and being just stupid, right? And then we spend 40 to 50 years kind of trying to wisen up. Mm-hmm. And so that's like one of the outer planets going round. I think I said this before and someone corrected me. Is it Saturn or something? If it takes us 1 year to go around the sun, some planets, say it took you 200 years, you might never see snow. If you saw snow, mm-hmm. you'd be like, oh my God, what is this stuff? So we're conditioned by the very slow passage of time. The thoughts with regard to hard money, and you name some people like Peter Schiff, they're kind of relevant today in the sense that gold has got a pulse. Gold's been trending. Gold changed its behavior in the year 2002, 2003. It exited a bear market, and it kind of has heralded and told you that the Federal Reserve was changing from this hard money ideology to we will go to all lengths to save the American household. Mm-hmm. There will be consequences. The consequences are being felt at the political economy level, where again, when you feel you're being taken hostage by the overseas sector, then the great fear is that we get closer and closer to conflict. Just now, the conflict seems to be of a trade nature, but God forbid that would carry over into military conflict. But that becomes a potent risk. at times like this. This is one of the unpleasant side effects of the Federal Reserve's policy. The other one is, again, when you're being pimped by the financial community, then again, it's the 1% get to own the economy. That is fermenting political revolution. You have Donald Trump today. We have Brexit in Europe. We probably have the inevitable breakdown and failure of the European project because of the Federal Reserve and other central banks' ideology of avoiding all crisis. Again, I think that you should try and avoid all crisis, but let's understand the pitfalls are really, really hard.
And one of those pitfalls, it sounds like you're saying, is concentration of wealth. Because, what seems to happen, and it's so hard to work out, I mean, you know more about it than I do for sure, but is that whenever you have all of these stimulus plans, just the people that are just kind of closest to the money, the people that are in that system, they get most of it. And, the little guy gets a couple of shekels, and that's about it.
Well, there's that. And it's just not free enterprise. I struggle and I hesitate because this is a global pandemic, where the statistics kind of say that really, I know it's not influenza, but, we have developed a mindset where just one life is worth sacrificing the US or the global economy. And we're kind of the wrong way round. And so our thinking, what I'm struggling to say is that 50 years ago, we were on the transition point from chaos into order. And the hardest thing about our life today, 50 years later, is that we're at another pivot point. But sadly, we are pivoting from order. The accepted belief system of today is one of order.
Right.
And we are pivoting into a world of chaos. That's the challenge.
Okay, so before you go, just enlighten us a little more as to what that chaos looks like, if you can. I know we got to wrap up here, but
let's answer that in the inverse. What was chaos? Or let me say, what did we do to reimpose order? We gave central banks independence, and we said, hey, look, bring on a recession to we asked central banks to control and to constrain the creation of dollars. That's just two examples of what we did. Another example would be we liberated the world. We used the great poster of the American dream and we projected that onto this blank canvas of the rest of the world and said, look how wonderful this is. Mm-hmm. And in doing so, we brought down the Berlin Wall and we liberated literally billions of people from tyranny into a world more recognizable as our world, okay? And then let's think of where we're heading. We're heading into a world where the central bank is less and less independent. The central bank works for the man, works for the chief of state.
Right.
We're looking at a world where the central bank is not trying to reduce inflation, it's trying to increase inflation. We live in a world where rather than reducing the money supply, they are desperate to increase the money supply. And we're living in a world where that whole liberation from tyranny is being rolled back. And this awful virus thing is perhaps going to make us less of a connected world and more of a disconnected world. Yeah. And so that's what I call the early signs of the chaos which awaits us. And that chaos with this burden of time which is now weighing upon us. A flight path, like a chaotic world that I could see, is that, like the boy that put his finger in the dam, the Fed put their finger in the dam in March, and they stopped the cascade. They stopped the prices from falling. But the pressure's, I think, going to mount and mount because, it's so bad for commerce. I mean, here I am in St. Bart's. Do I go forward and invest in I've got to make a decision in the next 2 weeks whether to go forward with a $4 million construction project. And I don't know if there's going to be any airline to bring my American clients from New York to St. Bart's.
It's a fair question, yeah.
So, and if I don't spend that $4 million, I'm just one guy.
Right.
Yeah, okay, one kind of rich guy, but I'm just one guy. Yeah, I think what you could see. Let me. I'm not saying this is going to happen, but this is the chaotic world. The Fed and its finger, the pressure against it.
It's going to get
the war
pushed out.
pushes it back. The S&P, which has rallied to, where's the S&P today? Like 2750, let's say. The S&P, I think, could plunge again, and then to 2000 or less than 2000.
2955.
2950. There you go. I was underestimated. 2950, and the high was 3250. So we've almost gone back to the high.
But you got the biggest investor in the world, buying up assets, the Federal Reserve.
The biggest investor in the world is when you and I become fearful. There isn't a central bank that can hold us back, because you and I and our resources and our access to leverage, and when we have fear, nothing can take us on. Okay, this is all just a game of confidence.
Yep.
So anyway, I can see the world. I could see financial markets getting slammed and falling again, and then the Federal Reserve and the U.S. government come in with another package, and then everyone gets loans from the government, and then they say, you don't have to pay us, and then we start really printing money, and then everyone goes, holy cow, I can't own 10-year treasuries at zero, and interest rates start moving, and oh la la. So I can see a world, the chaotic world that I could see would entail the S&P trading at 5,000 or 6,000 in the next 5 years, 10,000 in the next 7 or 8 years. And that would not be pretty. That would be a tragedy.
Yeah, wow. That's something, yeah. Who knows? Wow.
I don't know. For sure, I don't know, okay? But my franchise for the last 30 years was, life is capricious. There's always like weird things happening, not just in the financial markets. In day-to-day life, you always hear that expression, who would have thought that could happen? Who would have thought? Well, kind of my own little world, I'd be like, I kind of thought that in 2008. I kind of thought the gold actually could embark on like 3 decades of a dramatic bull market back in 2002. Back in 2012, I said, my role is no longer to be this moral curmudgeon commentator on the moral philosophy of the US central bank.
Right.
So my role is just to be contentious. I am not claiming any ability to see the future, but I would counsel your audience, and I'd ask them just one thing in terms of preparation. Think of the most chaotic events and begin to think of them becoming normalized, and then try and think how you could profit from chaos as opposed to order. And that's going to be very difficult, because for 50 years, we have trained our minds to think orderly.
Yeah.
And now and that's why, look at me, like people want to hear me, look at me. Do I look like do I look like Jimmy Rogers?
No, you don't.
No,
where's your bow tie?
This is the face of the future. This is chaos, my friends.
Right.
You heard it here first.
Yeah. That's pretty good.
Send me that 20 seconds.
Yeah, that's a good clip right there. I love it. That's perfect for your Twitter feed. Just, this is chaos. I love it. So the last chaos decade was the 60s or into the mid 70s?
I think chaos it's the transition between 40 and 50 year cycles. So I'm saying that we had a cycle of excess, a cycle of exuberance, which facilitated and enabled the US economy to leverage up. And typically the ratio is up to about debt 3 times incomes, yeah? And that concluded spectacularly with the crash.
Right.
The crash was made 10x worse by the ideology of the Federal Reserve. I then say to you, we spent 40 years deleveraging. At the bottom of a deleveraging cycle, everything is cheap. So here I am, the Caribbean, as you know, Richard Branson, the Virgin entrepreneur, he buys an island.
Yeah, I've been there twice.
The seller wants $1 million, but at the bottom of a deleveraging cycle, he says, I'll give you 100,000. And the guy says, thank you very much.
I think Necker Island, he paid $177,000 for.
107, but he wanted $1 million and they agreed on 177.
Yeah.
That's what happens at the bottom of the cycle, okay? Then you get the chaos. The chaos is the UK goes bust. It has to call in the IMF. The chaos is the Latin American crisis. The chaos is the petrodollar currency crisis. It's queuing for oil. The chaos is inflation. The chaos is the debacle of the American hostages, where suddenly you think, we used to be America. We used to be great.
Right.
What happened? Yeah, that's the chaos, right? Then you say, well, give me change. Let's kick these morons out. Let's kick Carter out. Let's bring in Reagan. Let's bring in Volcker. Give me order, right? That's 79.80.
Yeah.
But today is 2020, right? And today it's like, I'm so rich that I don't punish me with higher interest rates. So you know what? We're going to punish you with chaos. Buckle up. The ride is going to be torturous.
Interesting. Don't punish me with higher interest rates. So the pressure to leave these negative interest rates or, real negative interest rates, so you probably agree, out there. It's a funny time, Hugh. It really is.
Well, it's the Chinese curse. May you live in interesting times.
That's a good
we
way
may be imposing, or you may be imposing trade restrictions on their products entering their states, but they have imposed interesting times on you. So
no question.
Be careful.
Yeah. And that quote used to circulate a lot around in 2008. May you live in interesting times. And here it's back again. So you have some good stuff out there on Twitter, etc. Share a link or wherever you want people to find you.
I am defying convention because I know financial folk don't like Instagram. I don't wear a bikini. I may have to, depends how desperate I become.
Are you a social influencer? I think a lot of those guys went out of business on Instagram.
Well, like I say, I am going to reap chaos on everyone. I want people I'm training people to think chaotically. My passion is my Instagram account, which is Hugh Hendry Official. Mm-hmm. But really my followers, my tribe, if you will, are to be found on Twitter. Yeah. And it would be the inverse of my name. So it would be @Hendry_Hugh. And you will find me there. Soon to come is my YouTube, but my YouTube page is not finished yet.
Yeah, good stuff. But folks, think about how chaotic what he just said is. How many hedge fund managers do you find on Instagram? That's for 20-something girls in bikinis, and social influencers, right? So yeah, very interesting. Hugh, thanks so much for joining us today. It's really been fun talking to you.
No, thank you. Always a pleasure.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.